Thing. Good day, everyone. Thank you for joining us. I'd like to welcome you all to the Enterprise and Technology Working Group meeting. Some housekeeping items before we begin. Please keep in mind that this meeting, like all WSBA Working Group meetings, are subject to our WSBA antitrust and confidentiality policies. Please also note that nothing discussed in this meeting should be considered legal, tax, accounting, or investment advice, and that everything discussed is for educational purposes only. For those of you speaking during the call, please be sure to identify yourselves, particularly if you're dialing in by phone. With that, I will turn the meeting over to our chair, Sonia Gakwani.
Thank you, Stephen. Thank you, everybody, for joining. Today, I have Frank, a very interesting person we connected with, and the amount of energy that he brings to this forum, I hope it wears off on everybody. So it's actually getting into the digital banking space, and in terms of, how traditional banking and digital banking are going to coexist. And I think it's a great startup that they're looking at in terms of from an innovation perspective. But I have questions, obviously, in terms of how it will be adopted in the industry and whether people will accept it, how will they trust it, would other ecosystems believe in it? So these are some of the questions in my mind, and I thought most of you also would have the same questions in terms of, the traditional banking has already got the rails. We all come from traditional banking in some form or the other. So the whole ecosystem, the trust ecosystem, I'm confused on how it's going to be built out. And Frank, coming from Goldman Sachs and also from a startup world, very similar to my background, and just want to see how the vision of Hive Finance is in this space. So Frank, I'd like to go ahead, and if you could introduce yourself and dive in. And please, guys, keep the questions coming in. This is an interactive session. And we have Cindy, we have Jim, we have Rumi. All of them are going to be very excited talking to you, Frank. Go ahead. The floor is yours.
Amazing. Yeah. Thank you all for letting me speak a bit about our startup. Obviously, myself and my co-founder are super excited about it. So some quick background, and Sonia was kind enough to mention, started my career at Goldman Sachs. I was a trading engineer on a desk that was then called Global Liquidity Products. So the central funding desk, primarily repos and SecLens. Later was recruited to a data analytics team and started trading crypto out of interest because I couldn't trade individual tickers with all the MNPI I had access to. And, went down the rabbit hole from there, became obsessed with decentralization and all the amazing use cases associated with it. And ultimately quit Goldman, joined a different digital bank startup as chief of staff to the CEO. Learned a lot about the chaos of running startups, operating in that environment. And ultimately, myself and my co-founder came up with the vision for Hive Finance. And so I'm happy to discuss from, what problems we're solving, how we're going to do it, and all that fun stuff. So let me get Sharon here. And I'm used to Google Meet, so give me a second. Okay. Hopefully you all can see.
Yep.
Amazing. Okay, so Hive Finance, as I've already discussed, Sonia was kind enough to introduce. Basically, myself and my co-founder, I'm more on the investment banking side. My co-founder is a community banking guru. I call him .gov, and as much as my energy is build fast and potentially, get sued later if we're flirting the line in ambiguity, he is very much by the book. And so looking out into the market, we were quite frustrated. So there's a lot of issues in the existing digital banking, neobanking landscape. Ultimately, from a business model perspective, we firmly believe that they're unsustainable. They're fundamentally dependent on interchange and out-of-network ATM fees, and they can't retain their customers. So they are pretty much fully dependent on VC cash to prop up their business models. And so we see a massive opportunity to customize that banking experience instead of focusing on individual niche communities, whether that be product-based, like a Chime 2-day early pay, or demographic-based, like a Greenwood, which is primarily a Black and Latinx demographic. We can capture all of these communities by bringing customization, personalization directly to retail. And from a consumer perspective, why do they care? along with being able to actually participate in governance. First and foremost, they generally will care about quality of product and also the ability to utilize a single application for all, if not most, of their banking needs. And so on average, an American adult has over 5 apps that they use to manage just banking. And that's not even including crypto. I think I could easily go into double digits on that front personally. And so you could imagine one example we like to run through. If you're a new parent, you could come to Hive and be able to either select an existing fee and reward profile or create your own that will allow for customization of fees and rewards for whatever your financial needs are in that point in time. And so sticking with the new parent example, whether, new mother, new father could come and join, we call them colonies, right? But part of the Hive theme, could join a new parent colony and be able to access something like 10% back on Bye Bye Baby and allow for us to drill down on vendor specific rewards. Again, expand horizontally as opposed to targeting a limited TAM from day one and then attempting to verticalize that community. And so at the core, that's really what we're attempting to do here. And a lot of the member management, governance, etc., will all be publicly auditable via an on-chain governance smart contract architecture. Quick pause. Any questions yet? Anything unclear? Basically, sure, Ron, go for it.
Hey, now, Frank, thanks for this. I'm going to kind of dive into this a little bit. I want to make sure I'm reading this right. When you talk about personalized community banker, can you step me through Teachers of Texas? What am I looking at when I look at that?
Sure. So these are just two very, very basic examples. And so starting on the left here is sort of our colony, our community marketplace, if you will. We envision this becoming almost something like the Apple App Store, but instead of downloading Instagram or downloading Chase for your primary banking, downloading Marcus for your high yield savings account, downloading Fidelity for your investments, et cetera, you would actually be able to go into our application, access existing colonies, and select one that's best for you. And so starting with the marketplace on the left, they would then pick, I went to Boston College, so just as an example, a Boston College alumni community, aka colony, be able to see a full summary of everything, some existing proposals. So in this case on the screen here, again, just a very basic example, create a high yield savings account. Our main goal, and we can get into how this could potentially happen later. I don't know if anyone's a part of DAOs right now. I'm part of a couple. The UX for voting is atrocious, and you need to connect, and I don't like doing this, connect your wallets to some bot on Discord and jump through 13 hoops just to make a vote. Our goal is one tap, one vote. So, thumbs up, thumbs down, you see a summary of the existing proposal, where it's at. And looking specifically at these examples on the right is just to drill into some of the flexibility. So whether you're a teacher of Texas, your fee and reward profile may be very different from teachers of New York, from teachers of Wyoming. And this is taking a page a little bit out of the credit union model, which are supremely superior with respect to customer retention and quality of financial product for their community. So Teachers of Texas is very specific. That's very much a credit union example. And what you're seeing here is just a summary of some of the trade-offs that could potentially fit for Teachers of Texas or for car enthusiasts, for gearheads. But you could also imagine this applying to crypto curious is another demographic, or first generation investors, really kind of anything within terms and conditions, within certain constraints, really anything that retail can spin up.
So Frank, I mean, if you take the same example of, Teachers of Texas, I mean, the credit union is a perfect example. I mean, so here's a credit union that me and my husband are part of. It's the World Bank Credit Union. So what benefit does, like, for example, the World Bank Credit Union, if you're part of that consortium, it gives you a better credit rating, or gives you better insurance policies, or it gives you, you can have a better, 401k account there, or, I guess my husband's pension is somewhere connected to that account or whatever. So there's some kind of benefits around that, because it's the World Bank Credit Union, right? The bank has their own thing, and we have some. And if your credit rating goes up significantly when you're part of a credit union, why would they be part of this consortium? What is this, the benefits that you're? I mean, is there going to be any rating company attached to it? What are the, like, why would they get into it? Is my question here,
Great question. And so ultimately, you are effectively reading out some of our longer term roadmap, which is amazing. So it's great to hear that that is a true value add. I think initially, why people would join is quality of product. And so part of our thesis is we will have a community voting on all future product feature enhancements and releases. And so what does that mean? The existing digital bank model, they market very literally millions of dollars to their own customers to adopt and use features within the same application. And so part of our thesis is we'll be able to offer superior financial products because we will build products that are pre-adopted by our community. So we'll save a ton on marketing. We are also not going to be no fee banking like other digital banks. And so a lot of these rewards that I'm talking about are supplemented by the existing fees for any given colony. And so quality of financial product, number one. And then really it's customization and flexibility. And so we can offer a single banking platform that will allow for more than one product offering. And so you could use Hive for a high yield savings account, but you could also use it eventually for cashback rewards on Buy Buy Baby, and be able to join these different communities that'll allow for you to constantly be chasing the highest rewards possible relevant to you at this point in time. Now, why would they join this over a credit union is another great example. And actually, I think our closest competitor would be something like in the US, a Navy Federal Credit Union, which is a digitally savvy credit union. A lot of the times, despite a higher quality financial product, folks that we spoke with will have to make phone calls for their auto loan payments. And so while they might be saving 200 bips on that rate, they need to call once a month. And a lot of the younger generation get anxiety for calling and have to order for food. And so I don't envision that scaling very well. And a lot of these credit unions, there's actually a regulatory charter, which is a hard blocker with respect to their total addressable market and ability to scale. And so sticking with Navy Federal Credit Union, you either need to be active, retired, or a family member of the same in order to access their community. We do not have that same barrier to entry. And we will have, again, typically credit unions in the US, signing up is like signing up with a new doctor. And the forms to onboard are awful. They require approval. And you actually need to go through the same process once you're approved to join for each individual financial product within that platform. And so that's another reason that, again, our initial go-to-market, those folks would join as opposed to something like you're describing.
Yeah, but then, any bank they have a FDIC insurance backing up, right? So they have some kind of stability or whatever they can. What would this have? What stability would this ecosystem have?
Yeah, definitely. So initially, and we can get, it comes up later in the presentation, but there will be FDIC insurance, obviously just on the fiat. But our go-to-market is strictly traditional banking products. So part of our strategy, again, using a banking as a service provider, would be to actually access partner bank networks, and we use their FDIC insurance. I think longer term, we will have an even better backstop. And this is where, again, on-chain governance comes in a little bit. It's centralized to start, so more like Nouns DAO type governance. But ultimately, our community will have a direct say, if all goes well, hopefully within the next 12 to 15 years, realistically, our community will have a direct say in balance sheet management reserve ratio setting, et cetera, et cetera. So they won't even need FDIC insurance, or there would be theoretically a less of a chance for it, for that need. There won't be a Twitter run like there was with SVB, because our key liquidity metrics will be publicly auditable for all of our customers, and produced in such a way that I have a younger sister who's not very technical or financially savvy, love her to death, or produced in such a way that she would understand, green, amber, red, what's the health of my bank and the safety of my deposits.
Okay, let's move on.
Cool. Any other questions? It's kind of a bit of a redundant slide, but just to highlight again our very, very different growth strategy. And so Revolut did amazing work over in the EU, and their niche product, their niche offering was travel in the form of a massively improved UX for any sort of FX swaps. Now, that is way more applicable to the EU relative to when they expanded into the US. I forget the exact number, but a very small fraction of United States citizens actually have a passport and travel internationally. And so Revolut came here and struggled mightily. Their approach, again, focusing on a specific niche community and verticalizing a set of products to further monetize that community, is very different from what we're proposing with Hive. So again, some example communities here, right? Some off the cuff, some we've actually circled for partnerships. We will expand horizontally and then use this on-chain governance model to tell us which products to build next. So whether that's, again, like customized sort of vendor rewards, insurance, investment, credit, whatever it may be, we know, again, in theory, we know because our community has told us where we will have the highest ROI in terms of more sophisticated financial products outside of basic checking, high yield saving, and a potential joint account. And I would be remiss, my co-founder loves to say, it's banking as a service 2.0. And so instead of a set of founders going out, raising capital, building a ton of banking infrastructure, targeting a specific niche community, we are going straight to retail with that customization, so that if we're successful, no other founders will need to go out and raise capital to create a bank for people named Frank. Awesome. And so I thought it would make sense to talk about some of the underlying infrastructure from the perspective of someone actually joining Hive, jumping through the hoops to create an account, pass KYC, pass OFAC checks, et cetera, et cetera. And so building these banks, as I mentioned, is pretty arduous. It's a difficult process. And so our trade-off is hiring and partnering with vendors to get to market as soon as possible. And so some things that we are responsible for, right, you all can read here, is collecting personal data to be able to ensure that the person applying for a bank account, obviously US citizen, is not on any sanction lists, and that we can actually store that data in such a way that is compliant with, N number of regulations. We would partner, Sardine is mentioned here, whether or not we end up actually going with this particular vendor. We would rely on, initially, for our go-to-market strategy, some out-of-the-box solution in order for us to start building a customer base. Over time, we would actually build our own compliance and risk engine to be able to further tweak some of the risk parameters, which will allow for us to be either safer or less safe, which sounds a bit weird, but basically allowing for a easier, harder UX or auto approval flow relative to anything that may be going on in the business, whether that's a marketing campaign, a new product release, or a known fraud campaign going on in the banking ecosystem. Any questions, concerns here?
Ron, go ahead.
Hey, Frank, so I just want to make sure I understand. So Hive in this model collects member data. It says collects member data, member data collection verification, but you take that data and you offload it to essentially an AML KYC vendor, correct?
Correct.
Are you concerned about kind of the cybersecurity issues around those two hops?
So I would be much more concerned, and this is definitely, this is a very, very, I think, quote unquote, known flow, which on one hand does make me comfortable, but on the other hand, complacency scares me as much. I think this is something, Ben has built, my co-founder. This is his fourth digital bank. So it's something he's very familiar with. I know some of the folks from Sardine specifically, and they seem like a great team. I think what makes me more concerned, Ron, is relying on someone else's risk modeling to be able to feed our business, good or bad, sort of KYC, AML individuals. And to me, that keeps me up at night more than any sort of cybersecurity risk. And so part of our strategy, once we get funding and have traction, is working pretty aggressively to eliminate this dependency on the vendor, to be able to manage our own risk models associated with onboarding new clients. And then that way there are different levers and buttons that we can interact with to maximize our comfort at any given point in time with respect to risk acceptance for auto approvals and all that.
Okay, thank you.
Hey, Frank, this is Rod Brennan or Gerard Brennan with Luca and Rutgers. I work on research around auditing and crypto in the crypto world. And I was wondering, are you guys going to have a third-party assurance for your company, such as SOC or ISO or Basel or something? And if so, it would be a good idea probably to be sure that the vendors you work with have that as well, because then you have a accreditation that your customers could rely on for your, risk management and security,
1000%. And that's an excellent point. We very, very fortunately inherit all of that through our banking partners from day one. We will not be able to begin onboarding any customers unless we're fully compliant with everything that they dictate, and obviously regulators. So yeah, from day one, we inherit all of those requirements from our banking partner and need to be keenly aware of all of that. So that's a great point. That's a great
good.
So Frank, to add to this, I mean, one of my clients was a subsidiary of Lending Club, the whole P2P model, and we all know what the fraud happened in the P2P space. And credit risk was one of the major factors in terms of the whole P2P lending failing or whatever, not reaching. But as of now, I see a whole new loan market that has come into existence in terms of smaller loans that is needed, which P2P lending could not suffice it. So there's another loan-based models that have come in. And in fact, somebody just approached me a couple of weeks ago. The Texas-based company has started, a small loans for crypto, especially if you want to borrow. And they have no idea how they're going to do the KYC. I mean, I was like, you're going to give money to these people. How the hell are you going to figure out this person is going to pay you back? So I didn't understand the model, the company that approached me. And so I kind of see the similar things like P2P lending happening in this space in some way. Just drawing a parallel because I worked in that space. So you're right about having a credit risk in-house. That makes sense.
Absolutely. And it's interesting, Sonia. We get really excited. There's a lot of potential once we start introducing on-chain data to supplement the existing credit rating models. And I could talk about that for maybe an hour, just that. But we are looking to come up similar to what Plaid is doing with cash flows on their platform, like they just announced, coming up with a smarter credit risk model than what's currently available in the market. I think there's a lot of really interesting micro loan platforms, and actually Ben and I were looking at creating some of them just as a means to begin onboarding users in a pretty lightweight fashion with a low CAC. But yeah, to your point, I think the default rate is close to 50%. And we're talking loans less than about $250. They're called like spot me loans. But it is super interesting, and credit risk is definitely something that we would look to build a smarter model for the goals of course, making more loans to qualified individuals. I know like FICO has its limits, so there's a ton of potential once we start introducing on-chain transactions for sure. Awesome. And so this is where I get super excited as the blockchain nerd on the founding team. We have a real opportunity to bring an effective KYC AML, traditional banking KYC AML compliant digital asset to the blockchain ecosystem. Now, this idea is by no means unique. There are much more intricate, complex solutions involving things like ZK proofs, etc. It's something that in my previous startup, the head of Web3 was working on. But really, our immediate goal is to be able to identify exclusively the members and the people in the world that have access to our governance, to be able to identify the folks that can vote on product roadmap, join colonies, switch colonies, propose changes to the application. And really, I think that there's one entry to acquire this digital asset. And so a lot of the risks that come with DAOs just inherently with respect to DAO governance or Sybil attacks, those are also mitigated via the traditional banking KYC AML. And so, I get super excited. Eventually, we'll reach some sort of critical mass of users and be able to tell the Uniswaps of the world, hey, any digital asset printed from this contract address, you'll be able to transact with safely because we will ultimately store an internal mapping of user to wallet generated. And so we'll be able to, for free or at a fee, be able to tell Uniswap, you can now onboard this customer as a US compliant individual. And ultimately, a little bit more of a Web2 play, potentially be able to, whether it's via Dune Analytics or some other API, be able to actually pair real life demographics with on-chain behavior. And so you're seeing the Nikes of the world, the Ferraris of the world, the Guccis of the world begin to expand into Web3 and actually building an on-chain strategy. And we would potentially be able to offer them something real that's sort of a next level demographic analysis relative to some of the best guess efforts that Chainalysis, they do a great job, but that Chainalysis does. But really to start, we'll be able to identify who has access to our governance model, who is a member of Hive, who is participating, and unlock the ability for us to provide retroactive real rewards. And so, you could imagine for someone that proposed or participates in the last 10 governance proposals, us being able to programmatically identify those individuals and provide an additional 50 bips on their savings account for 6 months, right? Whatever that reward looks like. But really the focus is true fiat. Our initial go-to-market is not strictly the crypto demographic, and people care about cash more than they care about, ETH, generally speaking.
Okay.
Yeah, sorry, Frank, I've got a quick question here. And Amy, thanks for joining us. I know you got to hop. So Frank, when I look at this, and I think this makes sense, no personally identifiable information is ported on chain, but it does make me think of things like GDPR and right to be forgotten. So when you talk about something like this, do you burn a member token for someone who leaves and wants to be forgotten? Even though there's no PII on chain?
You're spot on. I think that's just the safest way to do it. It also keeps our governance ecosystem, if you will, clean. So there won't be any potential for someone to gain access to that account some way, somehow, or and by that I mean the individual governance token itself. And so you're spot on. There would be burn capabilities And those need to be built in. You can kind of see like membership properties here on the left. There would also be digital assets to identify the colonies, the sub-colonies that individuals are a part of. And so as people switch, those sub-colony tokens would also have to be burnt in favor of whatever colony they are actively a part of.
Okay.
So you are spot on. Yeah. And then again, that's another great example of us going back and forth between traditional infrastructure versus on-chain.
So thank you, Frank. One more question. Non-transferable NFT token negates possibility of secondary market forming. I get the logical implications of that. If you can't transfer it out to a secondary market, then you don't have to worry about a secondary market forming, right? But, and this might be me oversimplifying, if it's not transferable and contained within the particular ecosystem, does it need to be an NFT?
So here's why I lean toward NFT earlier. And so I guess first step, never officially engaged with any law firms, but very grateful to have access to some influential lawyers in the crypto space in New York City. I actually sat with them, spoke through the model. As you mentioned, it is like no secondary market. So there's kind of two considerations with SEC. What is the nature of the smart contract digital asset itself? And then how does the market actually interact with that digital asset? And so this was the safest way, given where we're at in terms of the ambiguous nature of it all. The reason why I went with NFT as opposed to a fungible token like an ERC20 or anything else is I think that, and I'm glad you asked because I plan on talking about this, the Uniswap DAO, the compound DAO governance models of the world are inherently flawed because they are or have become effectively a wealth-based governance model. And so you may remember there was a proposal on Uniswap DAO to deploy on Binance chain, and A16Z alone, just A16Z, because they invested in Uniswap and had a ton of tokens, were able to block that proposal. Now, whether that's right or wrong, opinions, et cetera, but I consider that a flaw. And so the reason I lean more toward NFT is because there's one person, there's one vote. And of course, there's a ton of limitations as well on that front, but I find that to be a more equitable governance model than if we raise VC cash and there's an ERC20 and they have all of a sudden 25% of the circulating supply and can block anything that we or our community want to do.
Okay, thank you.
Of course. Any other questions? I appreciate it. Cool. So tripling down on the blockchain nerd stuff. So digital assets need a home. They unfortunately or fortunately can't just float around. And so I have jumped around enough times over the last few months between Arbitrum or Base or Supernets on Polygon that at this point, I think it's just best to be blockchain agnostic. And so whenever we launch, we'll do a very, very deep analysis on where the existing communities are that want to use our product and prioritize those chains. So no real focus on an initial home for our wallet, our governance model, but there is a, given our initial go-to-market and target customers, a very strong focus on user experience. And this crew is definitely familiar with the management of seed phrases and everything that I personally am happy to do for the sake of self-sovereignty. But again, my barometer, my younger sister will never in a million years, manage a piece of paper with her seed phrase. And so a lesson learned from my previous startup as well is how do we completely abstract away a lot of the hurdles that come with any sort of self-custodial wallet solution. We are very fortunate. I believe it was March of this year, there was a release of 4337 EIP 4337 listed below, which allows for the creation of account abstraction in the protocol layer of Ethereum. And so we will definitely look to build out a wallet solution, partner with folks like ZeroDev, Coinbase Wallet as a solution, or Circle, and be able to, from day one, create a user experience that is as good as the existing digital banking experience in terms of onboarding. We could sponsor their gas so they don't need to pay anything when they vote. And what's great about this model is we are not a Uniswap, so we don't expect the transaction volumes that a DeFi protocol would have. So this wouldn't be an overly expensive endeavor for us. I think what becomes super interesting from our perspective, prioritizing customization throughout our roadmap, would be partnering with someone like a Coinbase, because all of a sudden we have access to not only, I think one of, if not the most reputable on and off ramp, certainly in the US, but maybe in the world, but also access to their base ecosystem, which has a ton of traction and is less hardcore DeFi focused compared to something like an Arbitrum. But really the focus is UX and making it so that folks are using this on-chain governance model without even really knowing it unless they look for it. And so you can kind of see in the example, just going back one slide, there will be wallet addresses, there will be an opportunity to click into Etherscan transactions, all of the fun things, or at least things that I think that are fun, that got me hooked on crypto. But for the people that genuinely don't care at all, and that's fine, the UX will not hold them back from interacting as smoothly as they do in their existing banking applications. So we have a digital asset, we have a home for that digital asset, both of which are completely abstracted away from the user experience. As someone that uses a ledger, this diagram and this enhancement that Goldfinch originally came up with has had me insanely excited. And so we need a way to actually sign and broadcast transactions. This diagram, it's a little simpler than it looks. There's a lot of arrows, steps, etc. But really, all that's happening.
And one question: why does an ETH signature be? So you're saying the solution translates the 4 native biometrics into an ETH signature. How would that happen?
Yeah, so that's the vendor turnkey, and so their model, we would have to pay by transaction to be able to change your Face ID, your thumbprint, whatever it may be, to an Ethereum compatible signature. The nitty gritty of it, I'm happy to look up. I'm certainly not an expert on how that works, so I'm happy to come back to this group with a deeper response into how that actually works. But basically, your Face ID signature, making it compatible with, any EVM chain is really the magic there.
So Goldfinch, I've heard of Goldfinch. In fact, they've been actually talking to a lot of countries from a CBDC perspective. They've been trying to implement their solution. So one of the clients I work with, they have actually come in there, but but I don't know if it's only ETH or they can do other chains too. I'm not sure. So I have to go and check on the notes. I have all the documentation on it. But
yeah, so I'm happy to follow up and confirm, but I thought it was all EVM chains. I know certainly ZeroDev, the smart contract, smart contract wallet builder, the bundler package and the smart contract wallet are certainly all EVMs. Happy to confirm that.
okay. Thank you.
No problem. So yeah, this particular advancement this year, I thought it was excellent timing for Hive, but also really for the crypto industry as a whole, which will never reach mass adoption if folks are clicking their ledgers and writing down seed phrases. I wish that was a future that could exist, but yeah, in terms of mass adoption, that will never be the case. So yeah, anyway, user will use their face or thumbprint to sign. Turnkey will turn that into an Ethereum compatible signature. And then ZeroDev will actually be able to broadcast that transaction to the blockchain. And so there's a ton of really, really interesting use cases here. I talked about gas sponsorships, but there's also things like subscription-based models, which you can see are actually starting to be released in the crypto ecosystem as a result of EIP 4337. Yeah, there's programmatic two-factor authentication that could start to come in. Let's say you transact $10,000 and it hits some sort of coded limit, then we would be able to actually go in and verify that it is the user. We could onboard via a Web2 email or Google account. It opens up a ton of real legitimate Web2 native use cases, and really assist with the next wave of adoption. Now, trade-off, it's a newer EIP, it's a newer Ethereum primitive. So, always take that with a little bit of a grain of salt. Greg, please.
Go ahead, Greg.
Is all this blockchain stuff really related to onboarding and identity and this kind of thing, or is it actually related to the business model and what the company is offering and what they're providing to customers, and why a customer would migrate from his or her current banking situation to this one? It seems that you might be trying to jam blockchain into something that is actually quite simple. From what I'm gathering so far, and I have to admit, Frank, it's a tad confusing, is that you're allowing people to choose the different types of services and reward structures that they want in a banking relationship that are relevant to them particularly, and within a colony, as you call it. And so you've got those already set up, or they've already been set up. From there, you're looking at how you vote, like how you manage the colony, right? So who's doing the, like the administration or the approvals of all of these things that we're offering or not, and that's you're sort of jamming blockchain into that. Is that right, or have I spent 44 and a half minutes completely misunderstanding what you're telling me?
No, I think you're right. I think that there's quite a bit of I won't say holes, but it was my understanding that this was a focus on technical infrastructure. And so our communities will be run by individuals. So just to go into that go-to-market really quick, we'll identify a CEO of another fintech that has a AI financial bot sort of manager, and instead of building up traditional banking rails, we'll actually partner with them so that their customers, their community, can come to us and access whatever fees and rewards are best suited for them. That community manager will then manage those fees and rewards, answering to that community. And so I completely appreciate why you're saying, are we just jamming blockchain in here? And yeah, we've heard it from VCs. I think there's two aspects, three aspects, right? These digital assets printed from individual unique smart contracts managed by us allow for a very easy member management process. It allows for the most transparent banking governance model that exists in the world. And ultimately, our long-term vision is to become a global network of banking communities. And again, it's the last slide, and thank you for helping me keep track of time here. But really, we want to become a global network of banking communities, and using a global permissionless technology is the easiest way for us to tap into our growing community in Italy or in Spain, and actually ultimately create a digital asset that will be able to identify Hive Spain, Hive Italy, Hive Australia. And so I hear you, but we don't see it as jamming in blockchain, either really in the immediate term, but especially for the long term.
Okay, right. So, but for the person who's really using the app, right, who's using the services, they don't give a damn about the blockchain component to it until they can actually trade crypto within the app. So realistically, all of this is back-end stuff under the covers to help people either identify from, like if they're getting services within their colony, you know, these specific types of services, you know, or not. So yeah, so all this is, yeah, this is interesting, and I understand, you know, yeah, you kind of look at this as a kind of a technical discussion. It's it's kind of a marriage between the technical and what's on the ground, and how this actually really does work and benefit people. And
Right.
the blockchain, okay, if it's usable in this context, and it sounds like if you want to be something global, then perhaps, you know, yeah, you're looking at, okay, we're offering, you know, a different type of reward for, you know, different parts of the world, for instance, for somebody that's in the US or Canada, for instance, like me, or anywhere else for that matter.
Absolutely. And you're spot on. 90+% of people just don't care. You're 100% accurate. Part of what we're doing with this on-chain, and why I talk about transparency, credit union retention is far superior to any bank. Those memberships are passed down literally through generations. Our thesis is quality of financial product, and because members are very directly involved with governance, they elect the members of the board, they vote on the financial products, they share in the revenue, and our model is a revenue share as opposed to an interchange model.
Okay, that's the first you've said that.
Yeah, so yeah, and most importantly, those votes, everything is verifiable and transparent.
Yeah. Okay, right. So it's meant. Oh, okay, all right, good. I'm not gonna reiterate what you said. Okay,
please,
good.
yeah.
All right, please continue.
Sure. Any other questions?
So I want to add to what Greg said is that, yeah, a lot of these building blocks, you can use an API and really plug and play. You know, what I'm also trying to understand is I think that, you know, community marketplace is a great idea, especially community banking marketplace. I don't think there's anything out there. Maybe I'm wrong. I'm trying to understand who your primary customers are. Are your customers are community banks? You trying to bring them online and to the new digital age with blockchain, crypto, and other added, you know, products? Or are you trying to target retail customers who are trying to find more communities to join? So I could be a veteran, so I belong to the veteran community, and then I'm also a day trader, so I also belong to a day trader community. So if I come to your website, I can join both communities at once. So that's on the retail customer side. Or are you selling this platform to community banks who are targeting their own communities? Those are very two different approaches. Everything else that you talk about here in terms of building block exists somewhere else that you can, you know, use APIs or something else to plug and play. And then my last question is, how do you, if you're targeting consumer retail customers, why would they come here, you know, compared to other neobanks? Because a lot of times their needs are met. So you have to offer something that are much more superior, because based on my experience, I have a couple of decades of, you know, payment and fintech experience. Solving that supply and demand challenge is the biggest in this case, I think. You know, it takes a lot of effort. It takes a lot of, you know, resources to really solve that supply and demand. It's not easy, and many companies fail because they can't solve that. If you want to attract community banks, you need to have existing retail customers to start with, and then vice versa too. So I would love to hear your thoughts on that. And I'm going to share something in the chat room about API that you could potentially use as well.
Thank you so much. Yeah, so to answer your question, and this might sound weird, it's almost this middle ground between B2B and B2C. And so Of course, we will market. We will do what Marcus by Goldman Sachs did and pay NerdWallet to show up and, best high yield savings account, all the traditional methods. But really at the core of our growth strategy, it's almost a business to community to customer play. And obviously there's no acronym for that yet. But what we're doing is instead of going out into the market, spending a ton of marketing to acquire individual customers at a CAC of, between $20 and $50, we are targeting individual community managers and accessing their 10,000, 100,000 community members through that trusted entity, through that trusted individual. And so I already mentioned partnering with fintech CEOs. A friend of mine, she runs a community. She has, 5-figure members. First generation investors, primarily Latino demographic. And we will be able to partner with individuals like her, go right to the decision makers, right to the trusted source, be able to access 10, 100,000 individuals. So that is our initial growth strategy. There's first generation investors, and I like literally Facebook mom groups, which have a ton of people in them. We're going to access community managers and target them specifically, sell them on a vision, sell them on our product, which will help their community achieve whatever their goals are. So that's our play. It is B2C, but it's more of a B2B kind of vibe, if that makes sense. I agree, there is a lot of API plug and place here, but of course, we need to do our due diligence on who's going to stick around, on how we can customize these products to fit our specific use case. Because again, we're spanning traditional finance and crypto, and there aren't a ton of companies doing that.
Check out the link that I just posted. Mash has all, I would say, majority of the fiat and crypto APIs that you can plug into.
This is great. Thank you.
They're growing backstairs in terms of onboarding different exchanges and neobanks and others. So there's one place that you can plug into. I think the challenge is still getting all the communities on board, because what are some of the value prop? And then also from onboarding standpoint, that KYC, I think it does take a lot of effort and resources to do so. Yeah.
Yeah, definitely. And real quick, I know Ron, you have your hand up. Sorry, go ahead.
No, just you can finish that thought. I'm digressing on a separate point. So please, Frank, go ahead.
I was just going to say, why now? The sell of personalization, no matter what your net worth is, and a bank that you can hold accountable, especially after SVB, First Republic, are messages that very much resonate based on our test marketing campaigns, very much resonate with the folks that we would target.
So I just a separate question, Frank, and I addressed this to you. I kind of addressed it to the rest of the group as well. CFPB recently put forward draft regulation. Cindy, you've probably seen this, on how to treat non-bank financial markets providers. Have you thought about what that might mean? And I'd love someone to correct me if I'm wrong, but on first glance, it really puts a lot of technology companies under the requirements that we now see for bank providers, which are burdensome for financial technology companies. But I'd love the group or Frank, you to give me your thoughts on that.
I think for Hive, we are a bank, so business as usual. But I actually do think that it makes sense where it doesn't, where it adds extra value to our longer term strategy. We will ultimately have access to all these communities, have access to their spend data. And so if there's a community, again, new parents, we would then be able to partner with Buy Buy Baby or Target or Walmart and actually enable those businesses to sell financial services through us. And so I'm not familiar with the details of the potential requirements, but with that said, it may further bolster that as a longer term play to allow for Hive to offer financial services on behalf of some of these businesses.
So Frank, sorry, just to follow up on that, and apologies, I've only had 2 cups of coffee today. You're a bank, or you're working with like a Sutton Bank as a underlying banking partner?
Yeah, on the screen now, at first we'll partner with a bank, but we have already started building a strategy to apply for our own banking license.
Okay, but you don't have a banking license yet.
Yeah, not yet.
So Greg, so coming from the prime brokerage word, I would call you a mini prime in some ways, right? You're a mini prime, trying to become a prime broker.
Hmm.
So that's what
Yeah.
they do. The mini prime basically piggybacks on the prime broker's license and gets the assets under management. So
Yeah, it's
Very
like the typical quote unquote neobanking model in that regard.
Greg, you remember we work with Merlin and others, right? I mean, so this sounds like a Merlin kind of situation, right? No?
Well, no, I'm not saying no. I haven't really thought of it that way. It hadn't sort of hit me in the side of the head that this would be similar to a prime broker model.
The mini prime, I'm saying. The mini prime.
Yeah. Huh.
That's what the mini prime does, right? It piggybacks on the infrastructure of the major prime broker. That's what
Yeah, true. Right.
Actually,
So
yeah.
so it's so mini prime, they would be a sub custodian to a main custodian and offer different types of services that the prime wouldn't provide.
Exactly.
Possibly leverage, or whatever, but possibly other services, and they may be better at some things than the prime would be, or more specialized in certain things like certain types of securities lending and this kind of stuff.
Right. And they go after a smaller provider, right? They go after a smaller customer base, essentially, in terms of
Yeah. Well,
funding.
yeah, a smaller customer base, but a more discerning customer base. Somebody that wants services distilled from a larger sort of, macro kind of service to something a little more customized. And
Exactly.
and this might be exactly that. And then, because again, if you go by Frank and indeed your thoughts about the credit union, and this is kind of a credit union on steroids, to the extent that you've got different types of services that are being provided through, and you've got the governance model and the potential rev share model, and certainly shareholderish model, not quite the same, of a credit union. And then the question is what sort of banking is it? I think one of the things that we're looking at, and whatever, and I think others have to too, and I know we're short on time here, so I'll be really, really quick, is that you talked about briefly you're getting away from the no fee model. No fee models are inherently risky, and I think we found that out earlier this year. The lower the fees, the higher the returns, means that the bank is acting like a hedge fund. And perhaps you move away from that to a better reserve type of banking, which might be part of the issue, part of the sales side here. And then you add that, you counter that with some of the specialized types of reward structures that you're offering. Anyway, that's just my thought. Thanks for that, Sonia. Appreciate the lead in on that.
I'm just thinking it too, because we both come from the prime brokerage world. So I'm just trying to understand how this new banking infrastructure evolve in terms of, and the whole regulators, in terms of how are they going to, figure out what the regulation for this would be, because they kind of have to look at how the different entities worked in the past, the credit union or the P2P or the mini prime. It's a combination of all that, I feel. So, and then mesh sounds very interesting to me. I just looked at it when Cindy sent it. I mean, so there'll be probably more mesh, just as an industry. I'm trying to understand how the industry will evolve. I mean, if you have the mesh connects of the world, will they be like, I don't know, will there be like a market, or will they be like, I'm thinking aloud. I don't know the answer, but I haven't looked at mesh connect in a detailed way, but just a first glance.
So Frank, I also think that I think, great concept, good presentation. My advice will be that less on the bill and tech, more on what problems you're solving for your, retail consumer needs, as well as community banking needs, your go-to-market plan, because it just seems like you're biting off a lot you can chew here, and it's overwhelming because a lot of these offerings are out there. So you might not need to build yourself, and a lot of it is just more about, bringing all these offerings to your customers in a more streamlined way. But that will be my recommendations from a storytelling standpoint.
Really appreciate that feedback, and I'm happy to share our actual pitch deck as well if anyone is curious. But Greg,
Yeah.
I'm totally stealing credit union model on steroids. That's our new one-liner. That's it.
Yeah, it seems to me, Frank, that this presentation is much more technical, and then I think I think you probably this isn't exactly what your real thing is.
Yeah.
I think it would be useful because I would love to see the proper deck.
Okay.
As to the aspects that Cindy was mentioning. I think that would be really interesting to see, because then we would get a really good understanding of what you're doing with this as a backup or background to, you've built all of this on-chain infrastructure to create a blockchain based credit union or blah blah blah, whatever you want to call it. I don't really care. But yeah, that would be good to have. If you can send the real deck to Sonia and she can forward it, I would appreciate it. I'd love to see it.
Sure. Appreciate that.
Rumir is go ahead, Rumir, your hands up.
Yeah, hey, really interesting presentation here. I've seen a couple of other like these like niche banking platforms, but I actually like that you're taking the community approach. I wanted to share something. So there's another app. It's not really like a banking app. It's actually for like indigenous communities in North America, which are obviously like they're kind of spread out. So they have like a community app where people can like vote, and there's like identity verification and like kind of like helps like bridge their community across like all their land that's like separated. But they have a really interesting model around like how they verify identity and stuff like that. It's obviously all Web 2 based. I think like adding the Web 3 elements makes it like that much more verifiable and like scalable, right? But I think that that's a good just on the community building front, and just like how they've like specialized their app like specifically for the community that they're servicing. I think like they have a good model, so it could be something to look into. It's called One Feather. I'll like send it in the chat. But yeah, I mean, there is a lot that goes into that. Like I think that you guys are maybe at a risk of like biting off more than you can chew, but I think attacking this angle or this problem from all the angles you guys have identified are like it's like a good plan of attack.
Yeah, Frank, I think B2B to C is probably the best way to go, from startup standpoint. So if you're trying to go direct to B2C, it's a lot harder.
Yeah, I no interest in that. Yeah.
Yeah, you'd be running out of money before you can get to scale. Yeah.
Costly endeavor for sure. I appreciate it.
Thanks, Rumir, for sharing that. Thank you very much.
Cool. Yeah, and then you all have access to this, but really like the governance model itself, trying to recreate the U.S. Constitution a bit. So if you're familiar with Nouns DAO, it's very similar to that. But I am conscious of time, so yeah, happy to share whatever materials anyone's interested in, and thank you so much.
We'll leave it there, Frank. Thanks so much. Thank you, everyone who joined. Sonia, closing comments or questions?
Thank you, Frank. I mean, this, just like Cindy said, I was equally confused, but I think there's another deck would probably throw more light on it. And I was trying to draw a parallel, try to understand the different models, but I do see a new banking innovation model evolving, and you may be one of the forerunners in that area. So kudos to you, and it's very interesting. Thank you. Thanks for presenting.
We'll leave it there.
Much,
Thank you, everyone. Take care. We'll chat again soon. See you next month.
Bye.
Bye-bye.